Canada's financial sector has had a pretty good year in 2021 that was capped off with announced buybacks and dividend increases throughout the big six banks. How is 2022 looking for those big banks? In particular, we are going to take a deep dive into the Bank of Nova Scotia. Also, if you stick around to the end, I have a little tip on how to save on all of those banking fees. However, before we get to that, we need to say hello to Nova Scotia, and we will do that right now. The Bank of Nova Scotia was founded way back in 1832 in, well, Nova Scotia. Initially, the bank was created to facilitate transatlantic trade within the Maritimes. Of course, by 1882, they had opened their first western branch in Winnipeg as the scope of their goal expanded into a more national one. A year later, they opened up their first branch south of the border in Minneapolis, and then they added a branch in Newfoundland, which at that time was not a part of Canada. As they continued expanding in Canada, Newfoundland, Jamaica, and the United States, it made sense to move their base of operations out of Halifax and into a more central city, well, namely Toronto. Into the early parts of the 1900s, they acquired the Bank of New Brunswick and Toronto's Metropolitan Bank, which made them the fourth largest bank in Canada. They continued to open branches in new countries, including Cuba and Puerto Rico. Now, those Cuban banks would eventually close in the 60s when Cuba nationalized their banking services. I guess to make up for that, they acquired the Bank of Ottawa. In the 1960s, they began to expand into Asia with a branch opening in Japan. They also became the first Canadian bank to hire women as branch managers. That is pretty cool. In the 1970s, they officially changed their name to Scotiabank, and they became the first Canadian bank to sign a collective agreement with a union. In the late 90s, they began to expand into Argentina and then into Mexico in the early 2000s. With continued expansion and growth at home, Scotiabank moved from the fourth largest bank in Canada to the third largest today. They have continued their push into Latin America and have truly set themselves up for a very bright future. Fun fact, the Bank of Nova Scotia was the first bank I had an account with. When we start to dig into Scotiabank's financials, we definitely are looking at a blue chip stock, and the numbers support that without a doubt. This is a company that has a lot of assets. In fact, if we look at a summary from their annual report, we can see they have $1.185 trillion in assets. In addition to that, they have $31 billion in revenue, which is not too shabby. Of course, once you extract all the expenses from that, you are then left with a net revenue of $10.2 billion. This is a lot of money that can be channeled into further growth, dividends, and stock buybacks, which we will get to in a moment. When it comes to their returns, they did beat the S&P TSX Composite, though fell shy of the S&P Total Return Index. This may make you go, wait a minute, but this is not really that alarming, as that index is skewed a little higher this year compared to the banking sector. In real numbers, Scotiabank has a ticker of BNS and a market cap of $99.4 billion. They have an earnings per share of $8.03 and a price to earnings ratio of 10.30. Their yield is 4.839%, which is paid out quarterly in the amount of $1 per share. Their growth is good, as their share price has risen from $79.01 to $82.66 for a return of investment of 4.6%. This is a very deceptive number, as the market is in a downturn. In February, for example, their share price was $94.73, which would have been an ROI of closer to 20% and closer to a 25% total return once the market recovers. The current price is not a terrible entry point at all, especially when you consider what is on tap for this company. Back in November of 2021, they raised their dividend and announced that they would buy back 24 million shares. At the time of this recording, they have already bought back more than 20.2 million of those shares. At the end of March, they further announced that they intend to increase those buybacks from 24 million to 36 million, which is absolutely fantastic for their share price as well as their earnings per share. Interestingly, longer-term shareholders after the buybacks basically owned 3% more of the company than they did before the buybacks. Scotiabank's earnings are due to be released on May 25th, 2022, and there are some analysts that believe we could be looking at another dividend hike. That would be great, and we will have to wait and see if that happens. I do not believe it is a certainty, but I can be hopeful. Of course, if you're watching this video after May 25th, you already know the answer. One positive outlook for Scotiabank is the payoff of their Latin American expansions. With the illness, these regions stuttered a lot, and the expected returns did not materialize fully. With the world reopening and things returning to more or less normal, these things will be better for Scotiabank, and that will strengthen an already nice-looking balance sheet. In addition to their Latin American holdings, the overall rate hikes by the Bank of Canada will only enrich their income at home. Scotiabank will remain a very good blue chip option for our portfolios, and they are really a very good long-term hold. This all sounds really good, and maybe it is, but it is only the beginning of your research. Always do your due diligence, and remember, as always, a financial advisor is the end of that process. I said if you stick around to the end of the video, I would tell you about a way to save on those service fees. Investing in the big banks is very profitable, but banking with them is a little bit more on the costly side. If you maintain a bigger balance, they will often waive those service fees for you. However, a better option may be to look into online banks that are service fee free. I personally like EQ Bank for their lack of fees and the 1.5% interest they pay on their savings account. I will drop a link in the first comment in case you want to check them out. They will give you $20 for free just to try them out. And full disclosure, I get $20 as well, which goes a long way towards supporting the channel. If you guys loved this video, be excited. There is way more to come. Until then, why not watch one of these videos? And before you jump into that content, just be sure to like and subscribe to support the channel. I'll see you in the next video.